Gold finished this week with a flourish, climbing back above $1,600 an ounce following disappointing economic news from the United States. Silver also rallied, and like gold, managed to wipe out its losses for the week. Up until Friday, this week it looked very similar to the previous two, as events in the Eurozone continued to weigh on gold. On Thursday, however, gold seemed to decouple from the euro, holding on to Wednesday's gains while the single currency fell below $1.24. Despite that move, spot gold prices ended May lower than where they started, the fourth month in a row when that has happened. Based on London fixed price data, gold has not fallen for 4 consecutive months since the summer of 1999. It may be, therefore, that Friday's action was just a blip in an otherwise bearish trend. But a lot depends on what happens in the global economy, and the news there continues to be negative. Friday's US non-farm jobs report showed 69,000 private sector jobs were added last month, much less than the 150,000 many analysts had forecast. The unemployment rate also ticked higher. In addition to the disappointing jobs data, Friday brought news that US manufacturing appears to be slowing down. The ISM Manufacturing Index is an indicator that signals how strongly the sector is growing, with any figure above 50 representing positive growth. In May, the ISM index fell from a month earlier and came in lower than many analysts were expecting. It's the same story in China, which this week published its Purchasing Managers Index for May, an indicator similar to the ISM index. Here in Europe, meanwhile, the UK and the Eurozone both saw their manufacturing sectors continue to contract. Another source of bleak news at the moment is Europe's banking sector. Spain's central bank revealed on Thursday that 97 billion euros of capital left the country in the first 3 months of the year. It is highly likely the situation has got even worse since, and Spain needs to find 19 billion euros to rescue nationalised lender Bankia, all of which has seen investors put more money into perceived safe havens. US, German and UK government bond yields hit new record lows this week, while the US dollar index hit its highest level for nearly 2 years. It is too early to tell whether gold has now joined the safe haven list, and dollar strength is likely to represent a headwind. But if gold manages to hold its ground above 1600, it would break the downtrend we have seen for the last few months. Next week brings monetary policy decisions from the European Central Bank and the Bank of England, with some analysts suggesting the UK could be in line for more quantitative easing given recent economic news. Across the Atlantic, Federal Reserve Chairman Ben Bernanke testifies before Congress on Thursday, an event that, as ever, will be closely watched by traders and investors. Bernanke has said the US needs to add between 150 to 200,000 jobs each month to meet Fed projections. As we've just seen, that didn't happen last month. To keep up with the latest in gold and silver, visit goldnews.bullionvault.com.